So I think private markets do a couple of things really well. They engage well with issuers, and they do a good job of measuring their impact. So I think what we need to do in public markets is to learn how to do a good job of engagement and also to demand really good measurement. However, there are a few things that public markets can deliver that private markets can't, and one of those is scale. So we have the ability to bring a lot more capital to bear on a problem than private markets can, and that's a really exciting opportunity for public markets. The other thing that we can do with public markets is we can go into a lot of areas that private markets can't necessarily do anything about. So we can bring a number of issuers, for example, in the debt markets, they don't have any equity. So we can go in and lend to a number of parts of the market that are just not available in private areas at all. Yeah, so I'd say a couple of things on this. Number one, the main way to avoid greenwashing is transparency and measurability. The more that we can measure the activities of the issuer, the better we're going to be able to understand whether they're doing something meaningful. We want to be sure that we're focused on the activities and not just on the labeling itself. That's really key. However, I would say we spend a lot of time worrying about greenwashing. And if you were to take the entire set of green bonds that's out there in the market and you just bought the whole set without worrying about greenwashing, on the whole, you would have a great portfolio of assets with very little, I think really relatively little greenwash bonds. Yeah, so I think this is a favorite area of mine. I think first of all, we are finding lots of opportunities that aren't labeled as green bonds or blue bonds or social bonds. And in 2019, we're going to continue to see many, many opportunities. Paper recycling companies, water treatment companies, a lot of things that aren't labeled, but that are great opportunities. That said, I think we may start to see some folks in the impact area talking about what do we do with companies that are dirty companies that are transitioning towards becoming cleaner. How can we enable that with capital? They're not going to issue green bonds because they're not providing clean power, but is there room for something like a transition bond? That would be another area that I think we might consider.